Let's talk about one of the simplest ways to build wealth. Getting paid just for owning pieces of great companies. Imagine buying a small slice of a giant business, and every few months, they send you a check, just for holding on. That's the magic of dividend stocks, established companies sharing profits with shareholders like you. It's not a get-rich-quick scheme, but a proven way to create steady, passive income that can grow over time. In this video, we'll explore the top 10 US dividend stocks, brought to life in a unique claymation journey. We'll break down why these companies are reliable, how they keep paying, and what makes them stand out for long-term investors. Grab a notepad, hit that like button, and let's dive into how you can start getting paid to own a piece of America's biggest companies. Number 10 is Johnson & Johnson, a healthcare giant with products in nearly every home. J&J is a dividend king, raising its payout for over 50 years, proof of stability and growth. Their business spans consumer health, pharmaceuticals, and medical devices, making them resilient through any market. Even after spinning off their consumer health division, J&J's focus on high-margin pharma and medtech keeps them strong. Their consistent growing dividend makes J&J a cornerstone for any long-term portfolio. If you want reliability and steady income, Johnson & Johnson is hard to beat. At number 9, Procter & Gamble, think Tide, Pampers, Gillette, delivers products people buy no matter what. PG is a dividend king, increasing payouts for over 65 years, surviving wars and recessions. Their global brands and pricing power make their cash flow rock solid. This financial strength means their dividend is not just safe, but likely to keep growing. For a foundation in your dividend portfolio, PG is a classic you can count on. Buy, hold, and sleep easy. Number 8 is Coca-Cola, a global icon with a portfolio far beyond soda, Sprite, Fanta, Dasani, and more. KO has raised its dividend for over 60 years, making it a favorite of Warren Buffett. Their unmatched brand and distribution means steady profits and reliable payouts. As tastes shift, Coca-Cola adapts, expanding into coffee, sports drinks, and healthier options. Their ability to evolve keeps the dividend flowing. For global stability and income, KO is a classic pick. Number 7 is PepsiCo, a powerhouse in both snacks and drinks. Think Doritos, Lay's, and of course Pepsi. This dual focus makes their revenue resilient, balancing out ups and downs in each segment. Over 50 years of dividend growth shows their commitment to shareholders. Their direct store delivery system keeps their brands front and center. Constant innovation and scale make PepsiCo a reliable, growing income stock. For diversification and steady dividends, Pep stands tall. Number 6 is McDonald's, whose golden arches are recognized worldwide. More than burgers, McDonald's is a real estate empire, collecting rent and royalties from franchisees. This model creates stable, high-margin cash flow and over 45 years of dividend growth. Tech upgrades and menu innovation keep them ahead of trends. Their reliable income stream makes MCD a top pick for dividend growth. For a blend of brand power and steady payouts, McDonald's delivers. Number 5 is Verizon, the digital toll road of our connected world. Millions pay Verizon monthly for essential services, creating a steady, high-yield dividend. Their healthy payout ratio means the dividend is sustainable. Massive investment in 5G opens new growth opportunities. While growth is steady, not explosive, Verizon's stability and income are hard to match. For high current income, VZ is a strong contender. Number 4 is AT&T, now refocused on core wireless and fiber after spinning off its media assets. The recent dividend cut reset expectations, but made the payout more sustainable. AT&T still offers one of the highest yields among blue chips. The turnaround is a work in progress, but if management delivers, there's upside potential, higher risk than Verizon but also higher possible returns. For value seekers, AT&T is worth a look. Number 3 is Chevron, a global energy giant involved in every step from drilling to refining. Their integrated model smooths out oil price swings, keeping cash flow strong. Chevron's over 35 years of dividend growth shows discipline, even through tough times. They're investing in both traditional energy and renewables for the future. For big cash flow and a growing payout, Chevron stands out. It's a solid pick for energy and income. Number 2 is ExxonMobil, another energy titan with global reach and massive scale. Their size lets them tackle huge projects and generate consistent cash. Exxon's dividend reinvestment plan lets your income snowball over time. Recent years brought record cash flow, debt reduction, and big shareholder returns. They're also investing in carbon capture and new tech for a changing world. For long-term growth and income, ExxonMobil is a portfolio anchor. And at number 1, IBM, a tech legend reinventing itself for the cloud and AI era. After years of stagnation, IBM's pivot to hybrid cloud and AI, led by the Red Hat acquisition, is paying off. Their high dividend yield is among the best in the S&P 500. Management is committed to the payout, making IBM a rare tech income play. If you believe in their turnaround, IBM offers both growth and income potential. It's a unique blend of old-school reliability and new-school opportunity. That's our claymation tour of America's top dividend stocks. These companies offer more than stock price gains. They provide real, growing passive income. Remember, this video is for education, not financial advice. Always do your own research. Check earnings, read reports, and make sure any investment fits your goals. If you found value, hit like, subscribe, and let me know your favorite dividend stocks in the comments. Building wealth takes patience and knowledge, so keep learning and investing. Thanks for watching, and see you in the next one.